Are you frustrated with day trading? Well, I was too. The fact is, less than 10% of day traders make money consistently. And that's why I started SPY T trading. SPY T trading, well, it's still a high risk, high reward style of trading, except it gives you your time back during the day, and even more importantly, helps you get the emotions out of your trading, which is what actually sinks most day traders. You may have guessed, we're talking about trading SPY or SPY, which is an ETF, an exchange traded fund, which is a basket of stocks, and in this case, the SPY mirrors the S&P 500. Traders like to trade SPY because, well, it's highly traded, which means it's also highly liquid, meaning you can get in and out of the trade easily. Even better, the options are also highly liquid too. This means we can take advantage of what we refer to as the overnight gap. Well, you've seen it. The market closes at one point at the end of the trading day and opens up at another. Well, that is the overnight gap, meaning the market's going to go either up or down. It's usually a reasonable size move that you can take advantage of. The question then is, what direction do you point? If you're trading options, you're going to trade calls if you think the market's going to go up overnight. But if you think the market's going down by the next morning, you would trade puts. But again, what direction do you go? Well, that's where the signal comes in. SpyTomorrow.com has multiple algorithms developed around the SPY to help guide you as to whether you should point up or down, and they have a free signal at 4 o'clock Eastern Time. Strata Pro also has a free signal at 4 o'clock Eastern Time. Don't get me wrong, I am in awe of profitable day traders. They have the skills and the patience to do what it takes to work through the market during the day. But the thing is, they often make small moves at a time, where overnight swing traders tend to make bigger moves with less effort. So at the end of the trading day, around 4 o'clock Eastern Time, you check in with your signal. Now that may be at SpyTomorrow.com, StrataPro.com. Maybe you have your own signal that you have developed. Maybe you're using MACD, a technical signal, or RSI, or even a put to call ratio. Whatever your signal may be, you check in at the end of the trading day to decide if you're going to go up or down with calls and puts. Now, there are other ways to go about this that can help give you a little more granular detail as to how you might trade it. And let's talk about that. You can successfully just use the up or down signal for your trading. However, some of the better signals have what we refer to as derivatives of those signals that give you confidence numbers. In other words, it may be pointing up, but how confident are we with that signal? What's the probability it's going to be correct? Knowing that will help you decide on your position size, in other words, how much risk you want to take in your overnight trade. No matter what, when overnight swing trading, you need to have a plan, and it's also important to keep an eye out on the news. Is there economic news or market moving earnings reports coming out? Because that can play a big role if the market might change by the next morning, because that is always a risk that we're playing with overnight swing trades. However, when we have confidence numbers and probability numbers to work with, we can decide how aggressive we wish to be. In other words, are we going to risk 2% of our portfolio, 5 or 10% of our portfolio or more, depending on how aggressive of a trader are we going to be. And we can also use SPY T trades, which are ratio trades. Let me talk about that. SPY T trades are overnight swing trades using options, and the SPY represents the SPY, the T for tomorrow, overnight swing trades. Now, we use it generically now because some people trade QQQ, IWM, or maybe even their favorite stocks such as Apple or Tesla. And many traders will use a ratio trade rather than a small directional trade, just a call or a put. They may have a 2-to-1 or a 3-to-1 or a 4-to-1 options ratio, meaning if their signal says up, they might buy 4 calls to 1 put, or if you want to be more conservative, 2 calls to 1 put. just depending on how aggressive or conservative they wish to be in their trade. As I've mentioned many times, the key is consistency and good management of your trades. Look, the bottom line is any indicator could be wrong at any time, and you need to be prepared and understand what are you going to do in every single scenario. That's why it's a good idea to paper trade first. Test out your systems and your style of trading before you put real money in. And again, you can do that with the free tools. Let me show you how it works with a couple simulations. This is the portfolio simulation tool available over at spytomorrow.com. So let's do a couple simulations. First, let's put in $1,000. And let's say our average position size for our overnight trade is 10%, which for some is a lot and for others is only a small part of the portfolio in which they trade overnight. The average win rate really depends on the algorithm you're using. The purple algorithm tends to be around 70 to 75% correct. The Strade Pro, as of recent, has been much more correct than that. So let's start with a conservative number, 65% correct. And the number of trades, we'll call it 240, equal to about a year of trading. Going down, click Simulate. And here's a result. But what if we want to see the result multiple times? Well, we can click Monte Carlo, and it'll simulate your simulation settings 100 times to even out the graph and see what about the average would be. And here you go. This simulation assumes that you are doing the same thing over and over again each day and does not consider human error. As you can probably tell, it's important to have confidence in your algorithms and signals. I've been working on these algorithms for years, and I've had great successes as well as failures. And currently, my purple algorithm, well, it's been the most consistent over the longest period of time. However, my Strade algorithm seems to be doing better right now over a shorter period of time. So it's important to get to know your algorithms, know their strengths, know their weaknesses, as well as understanding the ETF that you're trading. So in other words, don't jump from ETF to ETF, signal to signal, system to system. Get to know a very specific stock or ETF well and how it trades in different markets. Understand the strengths and the weaknesses of the signal that you're using, and over time develop a system that's consistent for you. So if you're looking for a high risk, high reward trading approach without the emotional ups and downs of day trading, well, give SPY T trading a try in 2025. And I'll see you in the next video.